Hi. Hey, thanks for coming and listening. I do really appreciate your time. Um, I wanted to just share a quick story and some points. I want to go over some additional things about life insurance, but I was thinking about it the other day when I was installing a new vanity and the top and the backsplash, and it occurred to me about all the different tools that I needed just to do a simple installation of a vanity. And I was like, yeah, I think about this every now and then. Certainly not the first time I've thought about it, and then I started to think, naturally, I would start to think about how many different things there are going on inside of the life insurance policy, and all the different ways you can think about it, all the different tools, I call them tools, that are inside of a policy that you have control over, that you can create different scenarios with. So, so this is another edition of 10 more things you might want to think about when you're considering life insurance, or if you have life insurance, to maybe be reminded if you haven't thought about it much, or maybe you didn't realize what whole life with a mutual life insurance company specifically is. One of the things that I wrote down today was that not all life insurance companies are the same. So you have stock insurance companies, which is the vast majority of what insurance companies are. There are mutual life insurance companies. They're not all the same. There might be, I don't know, I'll just guess somewhere between 30 and 40 in the US, and there's probably 750 to 800 stock companies. And then there are other type of insurance companies too that we'll get into that maybe in another time. But whole life, they're not all the same, and even within the mutual life insurance business, they're not all the same. They do things differently. So it depends on who's at the helm, I guess I would say, and is making decisions about how they want to guide the company. So I'm going to be reading from a list of things that I had written down here. So insurance is the insurance against loss of what? So for whole life insurance, the loss of the income from a person that may have been either injured, became ill, or possibly passed away. So you're insuring against those things with a whole life policy, just like you are with your car, in that you're insuring against the loss, and you can't get more than you're entitled to, just like with a car. You can't have a $10,000 car and expect them to pay you $20,000 because they're insuring it for 10. But your human life value is what they can insure up to with life insurance. Here's an interesting statistic. There's a thing called BOLI, BOLI, bank-owned life insurance. Banks are some I should say, are the number one purchasers of whole life dividend insurance, because it creates a tier 1 asset for them on their books. It makes their books look better, and they can use it for key man, key person, should say. So when When banks are looking for cash, obviously they can go to the Fed, to the Federal Reserve Bank after hours, so to speak. But you can also borrow from life insurance companies because they are cash, generally speaking, cash rich. They literally have cash because they don't do any leveraging, if you will, of their money. In other words, banks can do fractional reserve banking and insurance companies cannot. So they literally have to have the assets to back what it is that they're on the hook for. Should we lease or rent or start with whole life insurance? And what that question really is pertaining to, should we rent or lease, which is term life insurance, or should we start with whole life insurance? Well, yeah, when you first initially buy term life insurance, it does cost less than to start a whole life for the same death benefit, if that's all you're thinking about. But it's short-term thinking, and we really want to be thinking long-term because, that's what we think about in our life. We don't think that we're just going to live for 10 years, so therefore let's just buy a 10-year term policy. We are going to live for, depending on your age, but when you start, it could be anywhere from 70 to 80 years. If you're 18 years old and you start, or if you're 50 years old, you're going to live probably another 35 to 45 years. And so, okay, another tidbit about term life insurance is in the industry, only about it's high, but maybe 2%, let's just say for numbers' sake, 1 to 2% of the time, term life insurance actually pays out. So it's a real boom, so to speak, boon for the life insurance companies because they know chances are they're not going to be paying out death benefits on term life insurance. It's a kind of a cash cow for them. Whole life, they're on the hook for that death benefit. If you continue to, that's all you're required to do. All you're required to do is continue to make the premium payments until you decide you don't want to. Generally after about 7 years, you can do a reduced paid up with most any company, and you don't have to make any more payments, although the death benefit and cash value can continue to grow. So the choice is term, which is like renting insurance. And if you can't afford the whole life right now, at least you could buy term, convertible term, and convert it as time goes on into whole life. There are different terms to describe life insurance. Again, okay, so term life insurance, whole life, what I do, and within the whole life realm there is indexed universal life insurance, variable life insurance, and a couple others, and those are not really what we are offering. What we want to do is have people think long term in passing all the risk to the insurance companies. All they're required, as I said just a minute ago, are to make the premium payments. But then the owner of the policy has many options of changes and that they can use as their life goes on. Life does change, and so the policy many times can change with you if it's designed properly. And how about the question of how much life insurance should I get? Well, a friend, a colleague of mine, Todd Langford, said that if people understood how whole life really worked, knew it intimately, they'd be lined up around the block to get in and then Nelson Nash would say, somebody would say, how much should I get? Most people, Nelson Nash would talk about people eventually learn what this does, and they can't get enough. They want as much as they possibly can get once they understand what it really is. So what you're able to get, what you're entitled to get, is your human life value, which is, depending on your age, it can be anywhere from 30 to 10 times your annual income or your net worth. And if I'm not married, here's another one. If I'm not married, why do I need life insurance? Well, there could be a number of different reasons for that. Certainly you wouldn't want to leave somebody plagued with having to pay out of their pocket for your burial expenses, which there is a way of thinking about that. That's end of life expenses. And it's not inexpensive to bury somebody these days. But also you might want to, there are people that love you, and that if you passed away unexpectedly, early, quickly, there would be probably an immense grieving time. And if you had left them a sum of money that they could possibly remove themselves from the working world for a time to go through that grieving process, that's one way to look at it. Another thing is that you could leave money to your favorite charity or to your church or to a niece, nephew, all kinds of things that you could help. Somebody with a college education, things like that. Most of us have somebody that we'd like to help, and it's certainly one way. And that's these are all very short descriptions of different things about life insurance. What happens if I miss a premium payment or can't make the premium payment? Well, you can. The way that we structure the policies is that there is an automatic loan taken. If the company doesn't receive it, like maybe they go to maybe you have auto withdrawal, or maybe the annual payment comes around and you don't have the cash and you call them and tell them you don't have it, they can just take the money from your cash value, provided it's there, that this isn't like just the second or third year and you can't make the payment. And even with that, many times you can work around it. But people have done this where they've made annual payments 2 or 3 years in a row just by taking loans. Maybe their business has slowed down, or maybe they're unemployed, maybe they've become ill. So there is a provision in a whole life policy with a mutual life insurance company that allows you to move money over, to keep it in force. Why do financial gurus say no to whole life insurance? I don't know. I can just speculate, right? I don't know. I can't get inside their heads. But it could be a number of things. The first thing that pops into my mind is that they just don't understand it. I find that hard to believe, that they're in that world and somebody that really understands it hasn't approached them. So if one of these gurus is saying no to whole life insurance, and they've been saying it for 10, 20, 30 years, and they've built a brand around that, and then all of a sudden they came back, and said, oh, by the way, I was wrong, whole life is actually very good as a place to store cash for emergencies and for opportunities. Their whole brand would suffer. I think that's too bad, that they wouldn't just step up and say what's the truth. But anyway, that's it, like I said at the very beginning of this one. I really don't know why. they wouldn't have found out by now. Maybe they just don't want to, I don't know. So your guess is as good as mine on that. Why did my grandparents buy a whole life policy on me? I'm only 7 years old. Well, a good reason to do it is that when you're 7, chances are you're healthy. And maybe at the age of 12, you might not be. Maybe at the age of 25, you might not be. There's a lot of reasons why you want to actually get insurance on a child almost immediately. And I say almost immediately, depending on the whole life insurance with a mutual life insurance company, it can be anywhere, depending on the company, it can be anywhere from 7 to 10 days old, and you can get a life insurance policy on them. Now you can't, buy $5 million on them necessarily. It has to do with the parents' income, and they've got to have life insurance on them before you can get it on the child. But there's a lot of good reasons to get life insurance on a child. I remember as a little kid that my parents were paying for Gerber Life Insurance, and I think they paid, I don't know, this was 50, no, it would have been 60, hate to say it, 65 years. Well, I'm 67, so I don't know when they started, but they started when I was very young. I just remember this little Gerber bill coming in. It was life insurance for me and my 4 siblings at the time. It's all about insurability, that you may not be insurable in the future. You just don't know. And I know I said that there were only going to be 10 things here, but let's make it 11. And the last one is, why would a 65 to 75-year-old start an insurance policy so late? Well, kind of like what I talked about earlier, that if you're in good health and longevity is on your side in your family legacy, or in your gene pool, that's not the only consideration for length of time of life. But if I'm 67 and I just started a policy on myself, again, 3 months ago, I've talked about this, but I still need a place to store cash. It immediately bumped up my estate by, I think it was $580,000. So as soon as I made that first monthly payment, because I'm making monthly payments, it added that much to my estate. And they are legally on the hook for that. And so also I'm still in need of cash, and it's a good place to store it. But that death benefit helps protect my wife from my early demise if something were to happen. Again, I was thinking about my insurability, that I wanted to get something started before something happened. I get sick or get injured or whatever, that I'd have something in place to help my wife if anything happened to me. But also that the cash value, I will have access to it immediately, actually right now. And I will always need access to cash, and I'd rather have it be my cash that I have access to than having to go to a bank or something like that. And I'm not saying you shouldn't go to the bank, because there will probably still be times when I'll still go to a bank. but at least I'll have a backup of cash behind me that is growing uninterrupted. I'll say this again too, I've said this before, but I think it was Einstein had said the eighth wonder of the world was compound interest, and really what he should have said was the eighth wonder of the world is compound interest uninterrupted. Because when you take a loan with the life insurance company, you are leveraging the death benefit to have access to that cash that you've been putting inside the policy. And they know they're going to get paid, so they don't ask any questions about how much it is, when you're going to pay it back, and all of that. You're fully in control of all of that, unlike the bank down the road. So if I take a loan out on a car, just say I borrow $20,000 to buy a car, and I have $20,000 in my policy, it might be wiser to take it with the bank if the interest is lower and all that good stuff. But if I ever got sick and I couldn't make the payments on that car, I could always tap my policy for the remaining balance and pay it off, and then I could just pay it off as slowly or as long or never, if the policy was strong enough to handle that I might not ever have to pay it back, and have full control. Anyway, that was the next 11 things. And if you have any questions, just email me or call me or whatever you want to do. You can set up an appointment and we could chat. I'd love to talk about this stuff. So anyway, thanks for your time. I really just wanted to think about this as giving ourselves the space, the grace to continue to learn about this. Again, 4 years ago, I had no idea about this, but I've spent the last 4 years just studying all about it, and in the financial world and all the other instruments that are out there. That this is a great place to store cash while you're waiting for an opportunity, where you can leverage your money in a very, very safe and certain way. Anyway, thank you for your time, and God bless, and until next time, I wish you well. Thank you.